Hey guys, this is Simon with Trade and Perform Coaching. Doing the video, trying to explain how the waves work, right? The basics of just the waves and why they're important. And in that, I'm also going to explain the power bars that I have set up here. So these are waves. The green on my charts, you can make them any color you want. I'll customize them for you if you're in the room, in a different color. Green are up waves, red are down waves, and these are Wyckoff waves. Wyckoff waves have been around since 1932. The primary complaint about Wyckoff waves is they, just like all technical indicators, they write and they rewrite. However, my Wyckoff waves do not rewrite. Okay, so when you have a wave, so I'm going to be very specific. Here's it like that. I'm going to be very specific. You have a wave. This is an up wave, right? It's these bars. It basically starts on this bar and goes up. That's the wave. So this next bar does not complete the prior wave. It's when this second bar completes, and believe me, this is a Renko chart. So once that second Renko bar completes, right, meaning you get one bar here. So white is red. White equals a down wave, down volume, right? So once this second bar finishes and this third bar is being plotted in its essence, this wave will never change. Okay, so one of the complaints I get is like, well, yeah, but when you look back at Renko bars and you do back testing, you never know because they rewrite. These do not rewrite. Okay, first thing and most important thing that you need to know about the waves. Secondly, the waves show what the cumulative volume gets is in the wave. So as the wave continues to go up, it starts here, and the machine's simply counting how much volume is cumulatively. It adds this bar, plus 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 this bar. So cumulatively, you know how much volume was in the wave. So this is all just technical information, right? I'm not looking at all that or thinking about all that. I'm just explaining how they work. So why are they important? And there's one specific reason why they are important. I'm going to show you here. Okay, so these are a series of waves. And I'm going to make this as short and simple as possible. Don't worry about all the algos that are there or aren't there. I've stripped down as much as I possibly could out of those various waves. But once you have a wave down, right, and you get a counter wave. So this wave, this counter wave, failed to get above the prior wave down. Then you get a new wave down, right, as marked by the white lines, or well, red in my case, right? Then you get a little wave up. It's a little 2-bar wave up. Again, that wave fails to penetrate above the prior wave. Then you get a new wave down, last wave, right? That's represented right here. Once you get that wave down, you draw a line across. Now, I look for something called an orthodox close above the wave. This wave did not get above the prior wave, but then the second wave in that process, so this wave did not, green wave, but the wave after did. Why do I consider it to have closed above? So let's hold on for a second. Let me erase the lines and make this, I'm trying to make it go so slowly and be so clear because the concept's important and people should not be confused by it. There's the wave. Excuse me, wrong place. Here's the wave to the low, right? That was the new low in that sequence, right? See how this bar closed above, and this bar had no physical contact with any bar in this down wave. That is an orthodox close above. Once you get an orthodox close above, what that tells me is that there's a high probability. Remember, trading is about probability, not binary. High probability that the market can then move higher. Not necessarily immediately, but I have a pretty good idea that these sellers in this wave to the low are now trapped. In my room, I follow 2 rules. The first close above is good. I can start looking for longs if it pushes back in. The second close is great, and about 50 to 60% of the time results in not just moves up, but really big moves up. So I want to say that again. First time is good. It puts me on the hunt for looking for longs and forces me not to have to bottom fish, right? The second one is even stronger. So now I'm going to demonstrate what the market looks like in general, without a specific trade setup, what it does in general. So I'm going to highlight a few of these waves. I'll try to find a few failures, and that'll be the synopsis of the wave to the high and the wave to the low. So here's the wave to the low. Here's the first close above. If I get a long signal in here, I certainly want to stop shorting. I can start looking for the push up. Here's the second orthodox, excuse me, this bar is the second orthodox close above. Look to the right, and you can see you get the bigger extension. Now I'm going to demonstrate again. On this push to the high, see how we pushed from the lows all the way up to the highs. We got this wave. This wave became the wave to the high. Now at the time, I don't know that's the wave to the high, right? All I see is this. So that second bar prints, and I now know this wave is complete. So what I do is I simply put a line underneath that wave, and I go, hey, if I get an orthodox close underneath that wave, momentum has a high odds of having shifted. Let's go see what happened. There's the first close. This is the orthodox close underneath. And remember, inches equal massive gains in day trading, right? So there's the extension down. There's a second push back in. And in this case, right? So remember, if I'm trading, all I'm saying is I'm using it like a weather vane, right? If this closed underneath, I'm just going to go, hey, there's a good chance we roll over. So remember why that's important, right? If I short over here, right, let's just call it 45.10, it rolls down to 45.01. That's somewhere between $300 and $500 a contract, depending on how you manage it, just in this little move. And I go, hey, it can go lower. Now, I know if I get back over the wave, that there's a chance they're going to short squeeze out. Why would they short squeeze? Because these were trap sellers. Excuse me, these were trap buyers over here, right? So as it's coming up, most people are going to assume you can fade against those guys, right? See how they fade, fade, fade. They finally try to hold it, but when it failed to hold, this is the orthodox close above. Everyone who faded against them had a short squeeze. It creates a constant cycle of traps and new traps. So it applies to almost every product. I can go randomly and stop anywhere. So here's a good example. Here's the open, right? You see this push. Then this becomes the push to the high. See how it makes a little bit more of a high? This wave does not make a push to the high, but it also fails to get underneath what is the wave to the high in this little sequence right here. And then we finally make one more push to the high, right? And it actually eclipsed the last big push over here. And I get above that. So I don't know anything yet, right? What do I need to know that that's a wave to the high? There's nothing for me to do yet, right? I'm going through, and I go, orthodox close underneath. I've got two bars printed. I know this wave's not going to reprint, and this wave is definitely set. So now I can think in my head, what are the possibilities of setups? And there's everything from people who can tolerate large losses, right? Who have the ability to, they can tolerate large losses. So it's the first, that you could simply short here and cover if it closed above, right? It's just possibilities. I'm looking for specific setups in the room, right? But I know we're likely to go lower once we're underneath there. So there's the first close. And what do I want? I know if I can get a second close, I'm really in business. But you can see once it closes underneath that wave, it falls away pretty hard. And as it's falling away hard, what's the next thing I'm looking for? Can I get above a wave to the low? So this was a wave to the low, never got above. This was a wave to the low, never got above. Now I'm just watching, right? I don't have to take any action until I get above. That's my more conservative route, right? So there's the wave. There's a new wave to the low. I'm just going to follow it all the way down. Right, and I can tell I'm trending down now, right? So who knows if once we get above the wave. So remember, I want to get above my marker. Let's call it roughly right here. Not an orthodox close above. I keep going to work. Not an orthodox close above. See how that keeps me from getting trapped? New wave to the low. So now it's all the way from here to here, right? So now I'm going to adjust my screen. Okay, now I've got a new wave to the low. See how we got a green wave? It printed. All right, so now I have a new wave. So now I'm going to move my line right over here. All right, see, this created a new little wave to the low. See how we hit it? So now I can actually move my line down. That is valid. All right, still no orthodox close above. Stop. This is now my orthodox close above. So let's see if it failed or it worked. Remember, the success rate's in the 70 rate percentile, right? So that was, so if you look, so, and I'm fine with showing where it fails, right? That was an orthodox close above technically the wave to the low, and it failed. If I took the trade once it got above, I simply got stopped. Although granted, we'd be looking for an algo setup, but that's a different story, right? So keep going. We're still looking for the same concept. So this becomes now, I just shift, right? Stops are part of day trading. Wave to the low. And of course, the waves, you don't want them super micro. If you can get it something in between, that's good. And by the way, our line in the sand, let's see, this now comes to, if this is our low, this is our line in the sand then. Right? Line in the sand just means that's my critical point. Nope. Now I have an orthodox close above. So now all I want to do when I'm testing this idea, right? Does it go higher after it gets above there in general? Does it go to a profit up before it stops this out down here in the most basic rudimentary type of way, right? So I watch, goes higher initially, pushes back in. This is going to be on trend day down, so it's high. And actually what happened here was, if you look at this carefully, so this closed above, pushed back out. This is during a crazy time because of the way the market's been, but you'll notice this created a wave to the high, right? So what you didn't want is this orthodox close underneath. Once we got the orthodox close underneath, down it went, right? So I want to show something pretty important. And then you got, see this? That's now your wave to the low. Orthodox close above, pull back a little bit, then up it went. Now, when we had a little bit more stable markets, right? So I'm going to draw back on this just a little bit. When we had a little bit more stable markets, let's go back 90 days. It'll take just a second to load. So in markets that have lower volatility, you don't have to be as frantic about your thinking. Again, this is only addressing one aspect of our trading. So I'm going to go back here to into October, all right? So here, let's cover the wave to the low here. So you see this push down? It's a big wave down, right? And so then what I want, and it didn't quite, oh, it did by a tick. So see how we took it out by one tick right here, one tick underneath. So we went from this being my wave to the low, right? Big wave to the low. This became my new wave to the low. That's the top of the wave. That bar's my orthodox close above. And then off it'd go on its merry way. As you watch, as we're pushing to a new high, right? This becomes my wave to a high, which I have to get underneath. And you'll notice we never got below, where did that wave start? On this bar. We never got underneath, right? And we get a new wave to the high. It's going to be pretty hard to get underneath that. So we're just watching. Okay, so seeing this process here, so this is a little bit tricky. So we went through this process, we came down, up, down, but then we crossed this wave right here. We crossed this swing high, see that? And in the process, we got a series of waves doing that, right? Wave up, little wave down, wave up, little wave down, then a wave above. That became what I would call a local, as opposed to the wave to the high of the day. It's the local wave to the high. Again, I put a line here, and down it pushes. And then I start all over again. So you got to remember, right? This is now my wave to the low. It's a constant, never-ending cycle, right? So on this wave to the low, the question is, did I get an orthodox close above? So that's how I'm constantly measuring it. And it's not as hard. It doesn't go nearly as quickly as I'm doing it here. No orthodox close above. All right, so I'm going to go off to the right. We don't get above. We don't get above. Maybe we get above this one. It would be right here. So I would grab this. I would go right here. That's the wave I need to get above to reverse the market. Okay. Orthodox close. None of these qualify as an orthodox close above. That one, let me tell you, this one barely does. I wouldn't use it. I want one that clearly closes above that. So I just wait. That's my orthodox close above. See the difference? Like this is just like by a millimeter. I don't want that. Now I'm looking for a long. Let's see what happens. Okay. So notice, remember we're day traders, right? So what happened? I got the orthodox close above. This is now my wave to the low. I'm going to highlight it, right? So remember, I'm looking for day trades. Sometimes I'm looking for big swings. Sometimes I'm looking for little swings. But the important part, and we have algos to tell us, but the important part is, first of all, once this got above, did it go profitable? Well, it did. If you just took that bar right there, it went 34 to almost 44, $500 a contract in that little move. Secondly, when the backside tested it, right, backside tested into 28, rotated up to 36. In the process of going from 28 to 36, see how it created this wave to the high? And it got underneath the orthodox close, so it flipped. That's all it did. It's this constant flipping of position, flipping of position, flipping of position. That's all it's doing over and over again. So that's part A of the waves. It doesn't matter which product you look on for this. I can, for example, I can go to, here I'll go to the chart with all the algos on it. But if I go to, I don't want that one. Let's see this one. If I go to, let's say CL, right? So there's one with all the algos on it, right? So if I look over here, I'm just going to cheat and go and look. This is Asia, but this is my wave to the low right here. Right, this is my wave to the low. Put a line up the top of it. Going to get an orthodox close above. Now I can start working alongside the trade. Does it mean that that's the only way it'll go? No, of course not. I've got to keep working like this becomes the wave to the high. Do I get underneath it? Does it fall away? And then I want my algo to set up within that context to trade it, right? So just like any tool in the market, especially in day trading, it requires some judgment, right? But it gives you a really big clue as to, hey, which way are we heading? Which way am I leaning against? Where? And then, of course, you want to use your higher time frame charts. Like, am I above or below prior day's high or low? Am I looking for a particular location? You want to add all those things in, but when the market's going straight down, like if the market's going straight down and you're looking for a long, instead of just buying it and you keep getting dinged on the way down, right, with stop after stop, go, okay, well, see, like right there, the market's just going straight down. No matter where you bought it, you get dinged. If you'll wait till it gets above, like this is a fat trade right here. When it backside tests it, that's 65.87 to 66.50. That's like a $750 contract trade. That's a good trade. So anyways, that's as long as I wanted to go. The next video will cover what these power bars here, and I will go through them as step by step on how you can use them as substitutes to waves. They show a change in momentum. So that's coming next. Again, my name is Simon. I'm with Trade and Perform Coaching. You can email me. I don't have my logo on this. I'll add it later, but it's TRADE, the letter N, PERFORM at gmail.com if you'd like to visit the room or join the room. Please let me know. Okay, thanks, and have a great day, guys.